Oh boy, back to work tonight. Hope you guys had a great day out there, but it's time to get back to work. Fed Day is right around the corner. It is Tuesday evening. It's the 15th day of March, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday. Wait, not just any Wednesday, FOMC, we call it Fed Day, Wednesday's trading session. Got a lot of great trades on our radar for Wednesday's FOMC announcement tomorrow afternoon. In tonight's video, I'm going to cover all my favorite trading patterns, all my favorite setups for tomorrow. And you know me, I'm going to make sure we cover some little traps to avoid, right? That way you finish up the day tomorrow in the green. Whether you're trading with us in the trade room or you're trading on your own out there on FOMC Fed Day Wednesday. Got a lot I want to cover in tonight's video. Got a bunch of trades we'll talk about for tomorrow. Before we jump in though and get our hands dirty getting this video going tonight, make sure you subscribe to our YouTube channel. I publish all the good stuff right here on our video newsletter every evening during the week. I don't want you to miss tomorrow night's video, so make sure you subscribe, hit that little bell icon, because you know a lot of this stuff is very time sensitive, so make sure you subscribe. Also, if you have any questions for me tonight, you know I love to answer questions. Drop those questions in the comment section. I do personally check and respond to all questions in the comments, so don't be shy posting those questions if you got them out there. And I always appreciate you guys tuning in every evening. I know these videos are a little bit late in the day, so I appreciate you carving some time out and watching tonight. If you enjoyed this video as much as I enjoy making it, you know the drill. Hit that like button for me here. Really appreciate you guys carving some time out tonight. But enough of the intro though, right? Let's get this party going. Wednesday, Fed Day, is not going to trade itself. Where's the best trades for Wednesday? Where's the easy money for FOMC Day? Well, you can see here right now on the S&P and the Nasdaq, we get a bull market right now. Definitely very bullish here. Very bullish, you could say, right? Very strong pops going higher here into the close here today. You know that anytime we see a strong move in one direction, you know that buyers are just waiting to buy that pullback right now. So we definitely have some pullback opportunities here. But, you know, it's been a wild week so far. Big down day yesterday. Big up day today. Is there a possibility we may get a reversal off of this high? Oh yes, absolutely. We will definitely be watching out for some reversals. We'll talk about how to time the perfect entry on a reversal here tonight. And I'll tell you, we have a lot of open space up here. I'm not sure if you guys are watching these charts right now, but there is a mile of open space up there. And it seems like with oil dropping, S&P and Nasdaq kind of caught a bid here today. So we'll definitely talk about breakouts and kind of how to time the entries properly as this market, if this market keeps on pushing higher here. So we're going to cover the long side and the short side on the Nasdaq and the Emini S&P. And I'll tell you, kind of probably the hardest market we're looking at right now is the oil futures. We are very bearish here. Boy, it's tough to imagine. We've gone almost $40 within a week, right off that high. So we're back to a big round number again. We're basically bearish into a trading range right now. We're a bear market on this, but I'll tell you, and you'll see why I say this as we go into the video tonight. The sellers have kind of backed themselves into a corner right now. There really isn't a lot of easy short setups until we can really see a breakdown here. So, I've got my eyes on some reversals off the low. And obviously, we'll talk about how to sell the pops, how to sell the breakouts going down here. But I'll tell you, though, you might be surprised at the setups that I think are going to be where the easiest money might be coming in here for tomorrow. We're obviously bearish, right? So we're looking for the short side here on the oil, but you're going to want to watch all the way to the end here. I got some pretty cool stuff we're talking about here tonight on the black gold, the Texas tea, right? The crude oil futures. All right, now tomorrow, let's not sugarcoat this. Tomorrow's a pretty busy day, right? We got the FOMC announcement tomorrow. We got a big retail sales number tomorrow, and we also have that petroleum status report tomorrow. Tomorrow, of course, is the 16th day of the month of March. We get the big news tomorrow morning is that retail sales number. Boy, did you see that, guys? A 10%. Maybe you guys can correct me on this, but I believe the 10% PPI number we saw yesterday was the highest ever Is that correct? Does anybody have any confirmation on that? I wasn't able to find that on the interwebs here today. Maybe your Google will work better than mine does. Let me know in the comment section below. Is that the highest all-time, like forever, ever PPI number? I think it is, right? So we talked about that last night on the newsletter. But now, so here's the thing, right? We've seen retail sales really be strong. It's almost surprisingly strong with all this inflation. I can't imagine traders aren't going to be watching this retail sales on tomorrow to see if that's kind of the first domino that might fall because of all this just excessively razor sharp inflation right now. That is definitely something we have on our radar tomorrow morning in our trade room. And then, of course, you got the weekly inventory report tomorrow morning, right? 10:30 for oil traders. My rule on oil is I try to bracket that 10 minutes before, 10 minutes afterwards. Most news events, it'll be 5 minutes, right? 5 minutes before, 5 minutes after. The oil report, though, I tend to go a little bit wider on that bracket, right? So 10:20 to 10:40. So really tomorrow, if you're an oil trader like we are in the trade room, it's get to it early before the news or get to it later, after the news comes out. Now, as far as the big news comes tomorrow, yeah, the FOMC announcement is definitely going to be the biggest news for tomorrow. I think everybody and their mother-in-law right now is anticipating a rate hike, right? Somewhere between a 1/4 point and a 1/2 point. We have seen, I've been around for a long time in this business. I've seen a couple times where they're expecting a 0.25 and they give a full 0.75, right? So I've seen a couple times where they surprise the markets like that. So we might be seeing a rate hike tomorrow. I think we can all agree. I almost hope we do see a rate hike. Just rip the Band-Aid off, for crying out loud. These markets have been obsessed with the Fed raising rates for a year now. So hopefully they crank this thing up, kind of get it out of the way. Let us all party for the rest of the month of March. But hey, that's just my opinion. They got to raise rates, obviously. And so hopefully they'll do it here tomorrow. At least get that process going so the markets can stop obsessing about it. That is the big news, though. Right, retail sales is pretty big. Obviously, the oil report's pretty big. But the big news tomorrow is the FOMC announcement. What you want to remember about the FOMC day is usually the best trades are going to be before about 11:30, 11:45. And then I'll tell you the exact same thing I tell all of our students in the trade room. It's very difficult to find good trades after the FOMC announcement. Remember, my definition of a good trade is something I can really rely on, and there's very little reliable price action in the wake of that FOMC announcement. What I always tell my students on an FOMC announcement day or Fed day is make your money early in the day before 11:45, 11:30, 11:45. Try to be careful, if things aren't whipping around too badly, you can trade after that 2:30, 2:45, right, once the press conference is underway. But I'll tell you right now, you got to save your bullets tomorrow afternoon. Don't go blowing your account gambling on the FOMC announcement, because you know what? We have one of the best trading days really of the month comes the following day. It's a reaction day, right? There's a bunch of reaction days. There's Reaction Monday, which follows Non-Farm Friday. There's Reaction Thursday, which follows an FOMC announcement. Remember, guys, the big money in these markets, they're not going to be messing around with an illiquid, dangerous market like the FOMC time, right? They're going to save all that ammunition and they're going to unload on Thursday and Friday. So make your money early tomorrow. Again, you're more than welcome to gamble on the FOMC announcement. If you ask me, though, I'm saving my ammunition and coming back hard on Thursday into quad witching Friday here. So that's kind of my game plan here for tomorrow. And then in tomorrow night's video, we'll talk about how to unload that ammunition. We get a bunch of big news on Thursday, and we go into quad witching on Friday. Also, please remember the next couple days here, we are watching for oil rollover right now. Crude oil is on the 0422 contract. We will bump up to the 0522 contract. Usually oil will roll over before the 18th of the month. It could be tomorrow. It's looking more like Thursday, though, the way the volume looks right now. But be aware, though, once that CL0522 contract has greater volume, boom, make the switch and make the move up to the, the May 2022 contract. I can't believe we're talking about the May contract here right now. So be aware of that over the next, 48, 72 hours. Once that oil contract, again, we're going to be on the 422 contract on oil for now, but once that 522 contract is more total volume, boom, that's going to be your cue to go to the next 0522 contract. All right, we'll worry about that more tomorrow. Let's cover all the best trades now setting up for FOMC Fed Day on Wednesday. Now, I'm going to cover a lot in this video. We'll talk about the trades on the S&P, the Nasdaq, and the crude oil. The S&P and the Nasdaq are very, very similar right now. So what I'm going to do is I'll talk about different variations of ways to trade these markets. And of course, I'll talk about oil as we go deeper into this video. I'm going to keep it spicy. I'm going to keep it variety. I'll talk about different variations. I'll be incorporating different learning opportunities throughout the entire video here tonight. So make sure you watch the entire thing throughout the entire thing, and you'll learn something new in every single chart here for tonight. All right, let's not waste any more time here. Let's get right into it here, jumping into the S&P 500. What's the most important thing right now on this chart? The most important thing driving this market for tomorrow is probably just the strength of this move into the close. Anytime we see a real strong move in one direction, we know the odds are really good we're going to get a pullback and a retest of that high. Now, at that point, who knows, right? Maybe it keeps going, right? Maybe it reverses off that high, which I would love to grab that reversal tomorrow. And obviously, there's a chance here that pullback may turn into a reversal, right, and go lower. But the most important thing right now on this chart is the sheer strength of this most recent move here. That is very, very important. You can also see we have a range up here, right? Ranges act like magnets. Got a couple of ranges right here as we go. And those will be used for key support levels here. You can see marked up right now. Now, what do the buyers want to do? And the buyers have a pretty simple job right now, right? They want to buy pullbacks. Got a couple levels here. They'd love to buy there. I'm sure they'd love to buy right down here. Got a couple areas I'm really watching here right now for the long side here for the buyers. I mentioned earlier, too, there's a lot of open space up here until we reach that next big top up there at 26 3/4. So buyers would love to catch a breakout, going higher here as well. There's no shortage of buying setups opportunities here for tomorrow. How about the sellers? Yeah, the sellers, again, they would love to sell that double top, right? Love to sell a reversal off that high. Again, if this pullback turns into a reversal, bears would love to get that reversal going lower here as well. So I'm not afraid to be a seller in this market at all, but I do need to make sure we see the right trade setups to make it happen here. All right, let's talk about up, down, sideways, right? Let's do let's plan our trades so we can then trade our plan tomorrow morning in our trade room. Now, as you can see here, I have three kind of buy zones, right? Three battle zones as I call them. Now, whenever I have three levels like this with a very strong move higher here, there are kind of three different types of pullbacks. So I'm going to go over a couple of them here on the S&P. I'll do a few of them here right on the Nasdaq as well. I think the most important thing, though, is this is a really nice support level right here. This level right here. The only problem with this level is it doesn't give us a very deep pullback in what has been a pretty overall strong bull market here today. So if I get a shallow pullback right now, what I want to do is look for a trap entry to really give me kind of the best fighting chance I can use to buy as low as possible. These traps are really, really easy. Just wait for the bears to try a couple times, right, and look for it to slip right underneath a prior swing, right? Those traps will be great. So if all we do is pull back to this area here, right, that 36.75 or so, and the bears come over, right? They try to get short, right? They try to get short here a couple times. We can buy right into those stop losses with a trap set up, target, of course, back up to retest the high. What I would almost rather do here, is get this thing to pull back down into the low of this channel. I would really like to get us right around the high of that range, really. Those ranges make for great breakout pullbacks. So if we get a little deeper pullback on this, then what we can do is now we can look for the bears to get short and we can literally use those stop losses as fuel for the move going higher, right? So imagine we pull back, we get into this, 42, 22 area. Now we're not so concerned about the risk reward ratio. We're not so concerned about a shallow pullback at this point. So once those bears get short off the moving average, think about where all their stops are, right? Think about where their pain is and buy right into those stop losses with what I call a failure pattern. Now, once that failure triggers, all the stops get hit. Now all of the less experienced traders are to jump in on that first pullback, and you can jump in on that one as well. We call these failure into pullback combinations. These are really, really easy trades, and I know a lot of you guys have already taken the free trading course and you've learned the rules of how to spot a good failure setup, how to spot a good pullback combination. Most of you guys have grabbed that free trading course yet, but if you're one of the few folks here tonight that haven't learned these setups, haven't taken the free quick start class, haven't learned all the rules and aren't doing this on your own right now, I would definitely encourage you. I'll put a little link up here in the upper right hand corner. If you're one of the few folks that haven't taken the course yet, grab that free course link. It's free on the website, and this will give you a great roadmap to follow. I'll tell you, if you're sick and tired of missing the best trades each day, or you're taking too many losses, or maybe you're like me and you like to have a roadmap to follow each day, it just makes it easier. I provide the entire roadmap there on that free trading course. I also include hundreds of examples of how we apply things like our failure into pullback combination setups on our favorite futures markets, right? You're going to love that class. So definitely grab that there. Now, if we pull back any lower here, all right, what you want to be thinking about as we pull back is, does this thing start to reverse as we go lower? So how would I sell this market now as it goes lower here? And I'm going to talk about a really deep pullback in the NASDAQ. All right, I'll talk about how to buy this really deep pullback here on the NASDAQ. So make sure you keep on watching here for tonight. How do we sell this thing as it goes lower? Well, think about it this way. If we have a nice pullback, right, into support, and the bears, if they can't hold that pullback, right, if they can't hold that pullback, right, and we're going to buy into their stops, if they can hold it and jump off that moving average, right? If they can hold it and jump, remember that's the key, jump off that moving average. It's not enough to just get a strong pullback below it, right? It's not enough to get below the moving average in a bull market. Because what happens is you get below the moving average, try to sell short, it'll pop right back up. That's where I get my failure setups, okay? But if the bears can hold this and jump off that moving average now, one of my favorite trades on this is to draw a new trend line off that low, mark up what I call a hidden channel, right? Don't be foolish. Don't draw that trend line down like this and try to sell that trend line test. That's in my opinion, that's a rookie mistake, right? That's a rookie trade. Okay, what you want to do is you want to draw it backwards. Draw it off those lows, bring it up around that high, and then look left. And what you want is you want to get just above a prior swing. And these are money trades. Trap, we get above the moving average. The buyers try to buy it. We have all of this momentum now going lower. Once those bulls try to get long off the moving average, we can hit them where their stops are for a failure into a pullback combination. Trap, failure, pullback combo. Again, this is a 1, 2, 3 reversal pattern, right? They get a jump off that moving average, right, to get that transition into a bear market. Then it's all about the first test. It's all about the first test. Now on the NASDAQ, I'm going to talk about how we can now buy down here. All right, so you better keep on watching because there's a lot of ways we can trade both sides of this market. All right, so that's how you want to sell it as the market's going lower. I'm going to give you a few more examples if I had to short this thing on the NASDAQ as well. Now, think about the pullback here, right? How else can we sell this market right now? What if we end up pulling back here? The bears come in, they try to sell, right? This thing snaps higher with that failure, and now we go back up to retest the high now. Remember, anytime we see a strong move in one direction, we expect that retest. So now it's mission accomplished. Now, can I sell this market now? I can. What's my problem? It's not location. It's a great location to sell short. It's momentum, right? Momentum is too bullish. So in these situations, what you do is you want to use what I call a crown reversal pattern. You want to let the buyers try once. You want to let them try twice. And then look for a little trap off that high, or one of my favorites is a little hidden channel. Mark up that trend line there, bring it up around that high, right? And look for that short, right? Coming off of that high. That'll be a really nice short setup off of that high here, all right? I'm going to talk about a few more of these. I'm going to talk about some follow-ups on this as we go to the NASDAQ as well. So don't give up on me yet, but that's one way I can sell right off of that high. Easy setup. We buy off support. We run back up to retest the high. The buyers try a couple times up here. We find our areas of resistance, and we literally sell right into those stop losses. I got a few more variations of this on the NASDAQ, so don't go anywhere. Now, what if we go higher here? There's a bunch of different breakout patterns that we can use here right now. If the market goes higher, you're probably going to see a short squeeze, right? Because, I mean, think about it. This whole area is just there because of that big move down we saw a few weeks ago, right? I think it was a few weeks ago. It all kind of blends together at this point, right? So the bottom line is this open space up here, if we start to push higher here right now, you know, could be some headlines about Ukraine and Russia overnight. If we push higher here, there's a very good chance we get one of these two patterns. One is that pop and grind, right? Pop and grind. Once we see it pop and begin to grind higher, right? Pop and grind, right? It's not pulling back to the moving average. It's not popping in deep pullback. It pops and grinds. Once you get that pop and grind, again, these pop and grinds are very common when you have a short squeeze, right? Or a melt up market, because again, it doesn't take buyers to buy it at that point. These are just the bears who shorted that, right? Who shorted that big move down a few weeks ago. These are the bears getting out. Once this happens, mark up that high, mark up that low, and then again, look left, find those prior swings. This is where the easiest money is, right? Get underneath a prior swing. That'll get you under the moving average. Trap in those bears with a trap setup, a failure setup, and then grab that first pullback as we go. Right? Now, again, as part of that free course I mentioned earlier, you're going to see a lot of examples of traps, failures, and pullback combinations. Where's the target? Where is the target going to be on this trade here? Remember, the first leg, that pop, is almost always the measuring leg. Okay, now we know where the market wants to go, right? We know the market wants to get that big top up there, right? I can't recall what it was, 43.20 or something like that, right? But this will give us a really good, kind of really dial in that final target for us. To size that first leg, right? Size that first leg. Don't worry about the middle leg, right? Size of the first leg into that is that third leg. That'll really help you really refine where that target is. All right, guys? I have a couple more of these. I got a couple more breakout patterns we're going to talk about here on the NASDAQ. All right, guys? One more thing though here on the S&P. You'll notice that trading range. Right? That trading range. If we keep going sideways here overnight, ranges act like magnets. What do we do if it keeps going sideways here overnight? We find levels of support below the range, and there are three ways to trade a bull market into a trading range. One, you wait for the pullback into an area of support. We wait for the bears to come in and foolishly try to sell short. We use those stops as fuel. And remember, the market wants one thing. It wants to get to the other side of that trading range. So as the market pops back up now grab that new high, grab a low channel, and grab that first pullback. Ideally, you want that first pullback before we get to the other side of that channel. That's the other side of that range, right? That's the ideal. It's a failure into pullback combination, right? But again, this is if the range is there. Okay, it's a very big difference here whether or not it pulls back to a shallow pullback or if it goes sideways. If we see a sideways range, you can be a lot more aggressive now down in those areas here. Okay, and then there's one more thing you want to keep in mind. The amount we go below the range is the amount we go above the range. This becomes the next target, and then this is also where the breakout will be. All right. And we'll talk about some more breakout patterns here as we go. All right, guys. So that's how I'll be trading the range if we go sideways here tomorrow. Right. I'm going to cover more. I'm going to cover more of the breakouts here as we go a little bit later on in this video. All right. So don't go anywhere. Let's keep going. S&P, pretty easy game plan, right? On the S&P right now. We're buying those dips. And don't be afraid to sell, right? Sell those reversals either off the high or those 1, 2, 3 moves off the high here. How about some NASDAQ right now? NASDAQ is very, very similar, as you can imagine, right, to the S&P 500, right? We have again, the most important thing right now is the fact that we're very bullish. I think that is by far probably the most important factor on this chart right now. A very strong move to finish off the day here. And anytime we see a strong move in one direction, we know the odds are very good that we pull back and retest the high. Right? You'll notice too, right? Same kind of idea here, right? I've got some support levels below, support levels below, support levels below. Buyers would love to buy shallow pullbacks, modest pullbacks, and deep pullbacks, right? We haven't talked a lot about those deep pullbacks yet here. We'll cover that here on the NASDAQ. How about the sellers? Yeah, like I mentioned on the S&P, the sellers would love to get a nice deep pullback, double top, right? Find one of those crown reversals and short off the high here. The sellers can also look for that 1, 2, 3 move and sell that first test as we go lower as well. I'm going to cover a little more variations on this. Just like the S&P, the NASDAQ has a football field size space wide open overhead here. So do not be surprised if this thing just continues to short squeeze or squeeze those bears out, and the market kind of squirms as it goes higher here. So not a lot is different here on this NASDAQ. I do have potentially a range up here, so we're definitely going to watch for that range strategy, right? Find that trading range, mark up support, use that failure, right? Use that failure into first test pattern setup I mentioned earlier, right? That's a really good trade, right? Again, if it goes sideways here, so we'll still do that. If we pull back a little bit deeper, right? Again, if we just pull back right now, though, right? We don't go sideways here. If all we do is pull back right now, that's where a trap setup will be important, right? Because again, it's a little bit of a pullback, not very deep pullback. The risk reward ratio on this won't be that great yet. Right? So traps will be really important here. Ideally, we want to get, like we said on the S&P, want to get that nice deep pullback down into that trading range, wrap in those bears with a failure setup, and then grab that first pullback with that failure into pullback combo to go back to retest the high. Strong move up. You know the odds are pretty good, right? Those bears, if they try foolishly to get short below that moving average, right, we can buy right into those stops, hit it again, and then leave that target up around those highs, right? That's a great trade, right? And then one more thing here, and again, this is what you would think about on the S&P as well. Let's say, for example, the market really takes off to the downside, right? Let's say, for example, it really moves lower here overnight, right? We get some really strong moves down here. It's a real strong shot going lower. I really like this area down here. This is a really attractive area because of such a big move that we had today. But what's the problem going to be, right? If we end up, now remember, if the market makes that move lower, holds that pullback, right, and then jumps down, we can definitely be looking for that trap, right, and that short off the top of it. Again, if we can get that blast, right, coming off moving average, what I want you guys to be ready for, though, is there's no reason we can't grab that short off the high, take out these lows, and then once we get down to these lows here now use those same two try failures. Right, remember, at this point now, I want to be a buyer down here, but what's the problem? Yeah, momentum. Momentum will be very, very strong down here. So what you want to do is you want to let the bears try twice, right? Let them try once, let them try twice. Now, I always try to encourage my students in the trade room to find some sort of trend line here, right? Or some sort of trap level here, you know what I mean? On these 2 tri-theories, those are where the best entries are going to be, right? Again, giving you guys some variations of these setups to kind of reward you for watching through the entire video here right now. I'm going to keep on giving you more tidbits on this stuff as we go all the way to the end of this lesson here tonight. So bears will come in, they'll try once, they'll try twice. Again, find that trend line, find that trap level, right? And then again, buy right into those stop losses. Nice juicy signal candle coming off that trap, off that trend line. That'll be a 2 try failure. Now, at this point, your job is just getting started, because now where's the bullseye for the buyers? All the way back to that high. This is what we hope for tomorrow. We hope we can get that really big pullback, roping those bears, because then you know at this point now we go up, right? Make that run higher. Short squeeze here. The bears are caught short. They're getting out. Market flutters higher. Now what do? You leave a runner, right? Back to those highs, obviously. But you find that new channel, right? You mark up. Get that channel on there better, right? You mark up that. Again, I love prior swings. I love traps, because that's where the easiest money is, right? Get below that prior swing. Get those bears coming in, trying to sell short. We got that trap, that failure, that pullback, right? You could easily add to your position, or like what we do in our trade room is we trail our stops, right? Lock in those gains, and then look to get back in when it pulls back. All right, that's a great way to do it. And again, if we might get lucky here and get that 1, 2, 3, get that short on the way down, right? And then again, 1, 2, back up, find that new channel, and let it just run right back up to retest those highs. Okay, definitely going to keep an eye on that here on this pullback right now. What else can we do here as we go higher? Right, and again, we talked about the range here, right? We've covered that. Again, a lot of this will be very similar here on the S&P. Let's talk about, yes, I remember now. Let's talk about, okay, we pull back, we rope in those bears, we retest the high, right? Now, buyers come in, they try once, they try twice, stops are right here, right? Now, remember, think about the same thing we talked about over here. Now, if those buyers try once, this channel will be out of the way here, right? If we get back up, right, we retest that high now. The buyers come in, right? They try a couple times. They try once. They try twice. Again, think about that little hidden channel, those trap highs up there. Buyers once, buyers twice. All their stops are sitting. The buyers got what they wanted, right? Big move up. They got what they wanted. They retested the high. They take their profit now. Mission accomplished. Now the buyers struggle, right? Now they 1, they 2, and we get that drop, right? That short off the high here, right? Where does this market want to go next? It's going to want to rotate to the next major level, way down here. Okay, at this point now, I've got my short on, right off that failure, and now we go out, we find that new channel. Just like we talk about buying off the low, same thing. Get that trap, get that failure, that pullback combination. And you got a pretty good idea of where this thing wants to go, right? It's going to want to take out some of these lows down here at the very least, really, right? At the very least off that high. All right, guys? So that is a really easy way to sell short on this NASDAQ, along with these 1, 2, 3 break, right? Reversals and those scalps off the high, and then 1, 2 back up, right? Find that new channel and let her rip. Again, plenty of opportunities here, right, in different ways as we pull back and as we jump back up here. That's the way I like to trade in our trade room. Now, as we go higher here, I would definitely be careful around this measured move. This measured move, as you saw earlier, is a triple measured move. In all reality, there's a good chance this range here may just be a tease. We may end up, markets are notorious for going 3 legs and going sideways up here. So just keep it in mind, don't be surprised if this range is actually up here, right, at some point here tomorrow as it runs into that, into that measured move. Everything else, all things equal though, like we mentioned on the S&P, a lot of space overhead. I talked about that pop and grind, right, on the S&P and how they can mark up that nice tight channel. Don't get too, wide on this stuff, right? Don't waste your time and go, oh, We're too high up. I'm going to wait for this. We might get a deep pullback on that, like that, right? But generally speaking, when a market pops and grinds like this, it's a short squeeze. It's a very emotional market at that point. So very shallow pullbacks are all you're going to get usually, right? Find that channel, grab that, right? Grab that trap, that failure, that pullback combo. And again, I'm just simply kind of scribbling in the chart right now. You're going to see a lot of examples of how we apply these setups in our trade room. You'll see a lot of that stuff in that free course. So definitely grab that link up there to get more of the concrete stuff on these setups. Another one I would keep in mind here is that just like we're looking for a breakout pullback here, right, with that range, I'd love to get that breakout pullback right here. Imagine this thing goes sideways here right now. Imagine, right, we break out, right, big breakout. The buyers come in. The buyers say, wait a second, this is way too high, and we kind of jackknife. This happens a lot, believe it or not. Something spooks the market. They break out. We go too far, right? We go too far. The buyers reject it. It jackknifes back down again. At this point, remember, that strong move going higher is a big magnet now. And so now what you want to do is just like how we're trying to use this range for a breakout pullback, I can use this range, again, assuming we get a range there. So we break higher here, right? We break higher, right? We break higher. We kind of V-top on it, trap in those bears. And again, same thing, hit them right back to that high. I love this trade. One of my favorite types of breakout pullbacks is when it really runs and kind of spikes and comes right back and allows you to trap in, right? Everybody who thinks we're going, remember, we're not bearish. So anyone trying to sell those pullbacks here they're walking into a mess, right? So keep an eye on that as well. And then don't forget, we can easily move up into the measured move, pull back, hold the pullback, and jump, right? If we get anything that looks like a 1, 2, 3 breakout like that, that's easy. That's the easy stuff, right? Mark up that high, mark up that low, find that, right? Find that channel and get our entries off the low of that channel, right? Again, what is usually very common is first leg, third leg are the measuring legs. All right, guys? I've got one more breakout for you on the oil. All right, I've got one more breakout pattern we'll talk about here on the crude oil. I think we've got this pretty well put together though here on the Nasdaq. I'm looking forward to tomorrow. Hopefully you are as well. Remember, early in, early out, right? Make that money early on on whatever market you're trading because of the FOMC announcement. And guys, I want to commend you first of all. If you're still watching this video right now, I'll be honest, you are the person I make these videos for. I know a lot of folks have a very short attention span, and YouTube actually rewards me for making really short videos. But if you're watching this video right now, you are exactly the person I do these videos for. So hit that like button, make sure you subscribe, drop me a question in the comment section, and make sure you grab that free trading course, because if you like this video, you're going to love that free class. It'll completely change the way you look at the markets going forward. Okay, what's going on right now on the oil? And we'll wrap things up here right on the black gold tonight. What's the most important factor we have right now? I think there are two really important things that you want to think about here on the oil. Let me kind of clean this up a little bit here for us. You can kind of see where I'm going with this, right? What are the most important factors? The first one is this range. Right? This range. This is definitely the most important factor. Ranges act like magnets. We have a bear bias. And so obviously sellers, right, are selling at resistance levels up above the range. And buyers, right, will look to buy off the low of that trading range. Right? It's a pretty simple idea there. And we're going to look for, trend lines to basically buy low and sell high, right? That is kind of the core component on this. Here's another, I think, really interesting part of this chart. So we talk a lot about what are called inside days versus outside days. So if you look at oil today, right? Oil today spent pretty much the entire day. It did, right? Completely below yesterday's trading range. So when you see stuff like this, when markets spend a day below the previous day, what usually happens is we usually end up getting a really deep pullback somewhere into that, the base of that prior day, right? very, very common, right? They love to break out and then kind of pull back right into the base of that previous day. So this is important for me. Well, I think it's important for you too, because you can see this pullback right here. Again, it's an outside day. We spent most of our time today outside yesterday's range, so naturally you would think that sellers who are in control of this would want to get this nice deep pullback, right, and short it back down to that low. Why does this matter? This matters because, as I mentioned in the introduction, this is a bear market, but I'll tell you, the bears, they've kind of backed themselves into a situation right now because the bears are obviously committed. That's their deep pullback for today, right? That's their deep pullback. If they can't keep this thing going lower, right? If this thing starts to run higher right now we have a rising support trend line. Now we have the infamous 2-try rule and a possible failure back up. This does not get very easy for the bears unless this goes lower. And even then, right? And even then, as we go lower, is this where you want to sell? No, it definitely isn't, right? Not at those lows, not with that measured move down there, not with that trend line down there. So, like I said earlier, we're bearish right now on this oil, but I think it's pretty obvious there's more short-term opportunity right now to be a buyer on this. Now, don't get me wrong. As I mentioned in last night's video, oil is not hiding its intentions right now. It's going from the big round numbers from one to the other, right? So we went from 100 yesterday to 95 today. So where do you think the bears want to go tomorrow? I'm going to go out on a limb and say 90 probably, right? 90 is a pretty good guess, right? So again, we're definitely pretty bearish here, right? So I definitely want to be a short seller on this, but I'll tell you, it's going to be a little bit tricky here getting short down here. And so we'll talk about kind of how to use that kind of pop and pullback, right? As we talked about in last night's video, right? When you see a real strong move down like this in a key support, it'll pop up, right, and then retest that low. That's the same idea we're going to need to use over here. All right, so let's talk about it. First of all, as we go lower, if we go lower, right, how do the buyers want to buy this right now? Yeah, the buyers have a pretty easy job, right? They take it lower. They wait for the bears once. They wait for the bears twice. They find those traps. They find those trend lines, and they let it loose, right? This pattern right there, right? So now as we go lower, we take out the trend line. We take out that low. We take out the measured move, right? Could be any of these levels here. We're very bearish, so I can't be too aggressive on this. And let's face it, that knee-jerk reaction, that 130, per barrel we saw last week may continue to kind of slingshot this price on the opposite side. I was joking around with a friend of mine who's an analyst at a major oil company here in Los Angeles. And I said, what do you think the chances are we go from 130 back to 40 in just as fast as it happened, right? That slingshot, right? That would be very interesting to see if that happens here, because there never was really any shortage of oil, right? It was all just perception. Anyways, I'm getting ahead of myself. Let's get those bears here with one, with two. Stops are right here, and you can easily see now, as long as we can get into something before that, right, that trend line coming down overhead here. I really like this 2-try failure and then into that first test, right? I'm going to keep it simple right now because we've talked about these many times already, right? But bears once, bears twice. We're buying those traps. We're buying those trend lines. We're buying the stops. And then again, trap setup, failure pattern, pullback combo, target, right, back up at those highs. Target, if you want to, right, target all the way back up, obviously for a runner, right, at that big top up top there, right? That's a really nice long setup off of that low. Keep in mind, too, this could also run lower, pop back up, right, or so say run lower, retest, and then 1-2 back up, right? That happens a lot, too, right? Strong move down, they immediately short it, right, going lower, then we see 1-2 and we pop from there. Same basic idea, right? Now, how do we sell it as it goes lower? The key here to sell it as we go lower is exactly what I said over here, right? You're going to want to see a really strong pop down, right? It'll want a really strong push down. This will be a really strong move lower. Then we're going to go out, right? We'll look for that. We'll look for that strong move down. We'll go out, we'll find that new channel off that high, right? Get up, trap in those, right? Trap in those buyers and hit them right back down to that low again. Same thing here, right? Almost identical. We see that strong run lower. We don't want to chase it lower. We wait for the pop up. We wait for the buyers to try to reverse it, and we simply sell it back down to that low. It's that same sequence now, right? I call it kind of the pop and pull back, right? It pops lower, it pulls back. We rope in those other side traders. And again, the key to this, guys, the absolute key to this is this move down needs to really have some sting to it. Right? Look at this one right here. There was no doubt about that move overnight, right? It never even pulled back to the darn moving average. It just simply sank, right? So you know when it pops up, you know the odds are almost guaranteed to go back to retest the low. Don't try to catch that falling knife down here, right? Don't try to short the way down. Wait for that pop up. Wait for that failure. And again, I'll be looking for those channels, right, tomorrow morning, and we'll find those new channels and sell right off those channels. All right, guys. And again, I mean, you can probably it's probably money in the bank right now that 90 will be the objective, if not more. If not more, right? We have another key area of support down here, 87-ish, right? As we go lower. All right. So the pop and the pullback are going to be the money trades as we go lower, as we go higher here. Right? As we go higher here, boy, again, we're very bearish right now, so I'm very hesitant to call the bull side on this. But again, if this thing goes higher here now we have this rising support trend line now. All right? This is not good. This is not good, right? Buyers would love to buy off that trend line. Right? The sellers have to get underneath it and use it. That is not going to be easy. It's not impossible, but it ain't going to be easy. What is very likely in this situation, if you see that happen, is we're very likely to see one of those pop and grinds, right? Pop and grind, find that new channel, drill down, find your trap and grab it here. We get a juicy range up there, 101, 102 area, obviously 100. Big round number, right? 95 up to 100 makes perfect sense, right? Or we get a pop up, the buyers hold that pullback, we jump off the moving average, 1, 2, 3 reversal, find that new channel, and repeat after me. First test is the best test, right? First test is the best test. First leg, third leg will almost always be symmetrical, right? And again, keep your eyes on that range up top there. That's an easy magnet for us here as we go. One more reversal that I haven't talked about yet, and I'll give you guys a reward here for sticking around. Let's say, for example, we see a very strong pop higher here. Again, doesn't seem likely right now, but hey, plan your trades so you can trade your plan. Strong move up, shallow pullback, higher high in price. Traps, baby, right? Strong move up gets the mojo going. The shallow pullback drives the buyers crazy because they can't get into that pullback, right? The higher high confirms it's not just a V top. You know what I mean? Because that could easily happen sometimes when you get these big moves up like this. Sometimes those V top in these bear markets, right? So strong move, shallow pullback, higher high in price, traps, baby, right? That trap. Now I'm making this pattern pretty large to make it easy for you to see it. These can be pretty small sometimes, right? They might pop up, shallow pullback, higher high, right, and trap quickly on there. So watch that move, right? Watch that move as it goes higher. The giveaway is that strong pop and that shallow pullback, all right? That's always the giveaway with that higher high. All right, guys, I am very curious what's going to happen here on the oil. Again, I think there's some great profit to make buying that 2-try reversal off that low. Keep an eye on that pop and pullback, right, for the more safe money, right, as we go lower here. And again, if this thing starts to go higher, watch that trend line here, right, and again, use that trend line as your advantage. All right, guys. Now, I'm sure I've missed something tonight. I've covered as many of these, different variations as I can. I love to plan my trade strategy before we trade together in our trade room. And that reminds me, learning this stuff, talking about it is the easy part. going out and doing it the right way every day without forcing bad trades, taking revenge trades, messing the whole thing up. It's not as easy, right? That's why our trade room is such a great advantage. Whether you're sick of missing the best trades each day or you're taking too many losses, you're making too many mental mistakes, I literally designed my trade room to be a great place to learn and earn every morning at the opening bell. I'll put all of the information you guys need. I'll put all the details, the description of the YouTube video. If you're on the website right now, I'll put some buttons for you for the free courses, the membership classes, the trade room sessions. I'll put all that stuff in the on the website below the video here tonight. Don't be afraid to call the office. I'm always here. I know I talk fast on this video because it's already long enough video already, but we can slow it way down. Talk about the right computers, the right charts, the right data package, the brokers you want to use. We can make sure we get a good game plan ready so you're ready to capitalize on what have been some great markets over the past few weeks. So definitely don't be afraid to call the office. We've got live chat in the lower right-hand corner, and I'm always watching comments in the comment section below. Guys, I've taken up way too much of your time tonight. We'll cut it off here for now. Have a great evening. Rest up. We got Fed Day coming tomorrow. And of course, if I don't see you guys tomorrow night or tomorrow morning in the trade room, I'll see you guys same time, same place tomorrow night on the next edition of our nightly newsletter. Guys, my name is Joseph, by the way. Be well out there. Be nice to each other. And be here next time. Adios, amigos. Bye-bye for now.